Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Happy Halloween, everybody. Last day of the month. And we saw a spike up to 30.55 yesterday. After hours, they spiked it up. They came back. It's easier to show you on the hourly. So jobs report yesterday, your pre-FOMC price was 28.25. We chopped in the morning, which is expected. They traded as low as 25 off of jobs, and then they went ahead and established that 28 area as a higher low versus the 25 reaction low, and then it was off we go. They closed it at the highs up at 30.55. So it's a big day for us. We're still long. We still have a runner from 28. We've taken a bunch of profits on that trade, and it has come back off the Europe Open as low as 33.5. I'll be interested to see when we get back into the regular session whether we're going to continue to make lower highs, in which case I have no problem going ahead and trying to get a hold of a short there. Otherwise, what you're left with, and you see the weekly pivot, and I know we talk about this every week, but that's because it works every week. So there's been no interest in trading to or below the weekly pivot, okay, at any point in time this week. You've seen some tightness in the hourly bands. The mid band has generally been support early in the week. It got over the top of that 32.25 July high. We based there for a bit, held that pre-FOMC price, made one more new all-time high, and then we're up here at 55. Getting back to the daily chart, I talked yesterday about if the breakdown was to the downside, we would come back over time and test that 9-day. If the breakout was to the upside, eventually we would head higher and engage that daily upper band. Now that daily upper band is a ways away. It's basically 70, 69.5 to 70. But with a 55 high and a couple of potentially directional up days left, now that FOMC is in the rearview mirror, you have jobs tomorrow morning. It's my very strong feeling that unless the bears get a piece of news that is not only bearish, or the reaction to which is bearish, but it's sustainably bearish, not like Chile is going to cancel the summit because they're throwing rocks in the street, and some program out there has summit plus cancel plus China plus US, and it drops at 6 handles. We dropped yesterday morning only to instantly come back 12 handles because there was no substance to it. Unless the bears get news that the reaction is bearish and it's sustainably bearish, absent that, there's very little to stop the slow bleed to the upside, the rally that everybody hates, all the way up to engage that daily upper band, basically by close of business tomorrow. So, like I said, we're long 28. We're happy about it. It's been a great week. It's been a very good month. We're sitting at around. So I don't know if we've hit 500 or not yet. I haven't looked at it. It's been a very good month. And we move on to November and what's been a very solid year. I think the addition of the entry areas in the room has been, it's made something really good even better. So I'm really happy about that. So off the open today, let's take a look at 38.39 up through 42.43. 42.5 is volume weighted average price this morning. Daily pivot is 43. So 42.5, 43. Down to 38. So 38 to 43 is really your bull bear zone. One side or the other is going to have to establish dominance above or below that in order to control the tape for the morning. All right. Everybody have a fantastic day. We'll have some more stuff out on social. Come check us out. If you trade this stuff, if you want to learn how to trade this stuff, you got to be here. You got to be here. You'll love what you find. It's a great group of people. Take care. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.